we are back on Morning Trade Live. We've got a good look at the state of China e-commerce this week with JD.com and Tencent reporting earnings yesterday, Alibaba reporting early next week. Crane shares China Internet ETF is up more than 30% this year and hit a three-year high on October 2nd. So let's go inside out on China stocks ahead of Alibaba earnings. Joining us now is Brendan Ahern, Chief Investment Officer at Crane Shares. Thanks so much for your time, Brendan. So nice to speak to you as always. Happy Friday. So, just before we came to you, I painted a pretty grim backdrop of the sort of macro picture right now off the back of the data we got last night. Crane shares up this morning, Alibaba up this morning. Why are investors not too worried about the state of the Chinese economy right now?
Yeah, thanks. Great to reconnect, Sam. Good to see you here in the U.S. But no, I think the data, the economic data in China has been not too hot, not too bad. It's kind of mediocre at best. But at the same time, you still see from the company some great earnings growth, and I think that's what the financial results from Tencent, JD, as well as Bilibili yesterday, Tencent Music Entertainment earlier this week. Actual companies geared to China's economy are actually doing all right. I think overnight we had this real kind of U.S. AI valuation-induced sell-off. Really, growth stocks globally were just kind of hammered, particularly the semiconductor stock in Japan. But so I think it's a little bit of big picture. China's doing okay, but some of the companies geared to China's economy are finding opportunities.
Yeah, they certainly are. And I mean, as you say, Tencent, Jingdong, JD.com, not looking too bad. Even if there was a little bit of margin pressure there, it does look like the investments like JD is making into perhaps some of the food delivery wars is paying off for them. Tencent is now getting into this 3D imaging sort of new world frontier of artificial intelligence. I don't even think we've got past this frontier to get to the next one, but I'll leave that there. But taking on the likes of XAI and what Google's been doing, it's certainly interesting. Let's talk about Alibaba, though, because we're going to hear from this one next. And this has been a big one because it's up like 90% year to date. It's really been a favorite this year, particularly as a sort of more inexpensive way to play the whole AI theme. Talk us through what you're watching as far as the metrics, because to my understanding, it's really been the core business. It's been getting back to what it's good at, e-commerce, and also when it comes to the cloud, as far as those revenues, they've been holding up. But what are you going to be watching?
Yeah. The core e-commerce business has been challenged because of very light domestic consumption in China. I think there's going to be increased policy support. We've got the draft of the 15th five-year plan, which really emphasizes raising domestic consumption. At the same time, the actual e-commerce numbers have been pretty light, and that's why you see kind of top line growth is pretty lackluster. Just analysts are expecting only 5% revenue growth year over year. At the same time, in the previous quarter, you had more than 20% growth in cloud. So I think investors are going to be very focused on the cloud computing. Can that pick up some of the slack based on the tepid top line growth due to the core China e-commerce business?
Okay. I'm just wondering, as we look at, what people do see as more of an inexpensive way to play the whole AI theme with sort of your Alibabas of the world. I do want to just switch gear to XPeng, and I know we are supposed to be talking about a lot of the retail and e-commerce players, but I do want to pick up on what we've seen this week with this kind of view that it's going full Tesla right now, with this sort of validation of robotics, humanoids, etc. I'm just wondering what you're seeing as far as that company, as to how much credence we should give to this story as maybe another sort of cheaper way to play the whole AI trade, and particularly off the back of what Tesla's been doing.
Yeah, definitely. I think Crane Shares is known because of KWeb, and I think Alibaba's IPO really helped put KWeb on the map. At the same time, I think Unitree is going to put our COID ETF. So we launched a global humanoid robotics ETF called COID. And I think this Unitree, the largest robotics company, they're making 200 robots a day in China today, Unitree. They're going to go public very likely in December in Hong Kong. It's going to be a massive IPO. But yeah, XPeng, very similar. I think the automotive companies, as well as a lot of the OEMs globally, don't realize that they're actually going to become robotics company. And Elon Musk has spoken to that there's actually talk of is Tesla even going to be making cars in 5 years? Is it solely going to be producing Optimus? XPeng, the big Chinese EV automaker, very similar visionary CEO founder who believes that the company is going to really morph into a humanoid robotics company. And there's a whole host of players that we think are going to be beneficiaries of this trend. And it really is driven by AI. It's kind of interesting to me, Sam, that as much as people talk about AI, they're not talking, it's not connected to humanoid robotics, but that's something that's coming. And I think, you'll see those dots connected in the not too distant future.
Yeah, I mean, Coy is a good friend of our network here at Schwab. I mean, he was here with me on set. So, we go way back, and we always welcome Coy onto the set as well. Brendan Ahern, always a pleasure. Thank you so much for joining me here today. Happy Friday. Have a great weekend. Chief Investment Officer over at Crane Shares. Let's trade it now with Tom White, host of Fast Market. So we mentioned Alibaba out with earnings in coming weeks. What's your example trade and approach for this name?
Well, it's had a good run. A lot of the Chinese stocks have. Appaloosa just came out. It's their top holding. David Tepper's Appaloosa and some other hedge funds have been buyers since the start of the year. So that's lifted up this space. Stock's up 88% so far this year. It's pulled back about 17% from those recent 4-year highs that we saw last month, but still a lot of momentum to the upside. They have earnings on the 25th, so that's going to be maybe a potential catalyst, but also higher implied volatility in that November 28th weekly option series. So that's the one I looked at. Going out about 14 days till expiration. You're going to capture that earnings event, so implied volatility levels are higher. So I looked at a neutral to bullish short put vertical that takes advantage of upside exposure, but then if the stock doesn't do anything, or maybe even the stock pulls back, I can still profit on this type of strategy. So in that November 28th weekly options, sell the 150 strike put out of the money to the downside by about 10, 11 bucks. And then buy the 140 strike put. So a short $10 wide neutral to bullish put vertical. Collecting roughly, I've got 225 credit on here. That's where it was trading before the market reversed, and now we're higher. So probably trading about $1.70 right now. But the credit you collect is what you can make on this particular trade. So if you collect 225 bucks with $775 in risk. A little bit more risk versus reward if you collect only $1.70. But that break even on this one of 147.75 over the next 2 weeks, that's about 8% below the current share price in there. So you got that big cushion to the downside. The probability of that short 150 strike being out of the money at expiration, which is what you want the stock to remain above 150, that's about 70% probability. So probabilities in your favor, higher implied volatilities due to earnings. You just need the stock to remain above basically about that 148 level.
Up 1% today, up 90% year to date for Alibaba. Going to be reporting earnings at November 25th. That is Tuesday before the US Open. Thank you so much for joining us on that. Tom White, as always.